All right, and welcome back for the episode of This Weekend Charts via Carnival Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So, markets here overall finished by and large sideways. You're going to see here the spiders managed to be fractionally higher on the week here. So that's 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row, 8-week winning streak, and into the end of the year for the S&P. And we do have a shortened trading week. Obviously, the holidays coming up. So happy holidays, Merry Christmas to everybody who celebrates. If you're outside of the U.S., just be aware that the markets will be closed this Monday, and we will have a 4-day trading week next week. That will mean lots of light volume and very low participation. So if you're a trader, might be an area of the year where you want to take some time off or take it easy. But in any case, into the end of the year here, market's still holding up and holding on to that 8-week winning streak here. We did have a little bit of volatility on Wednesday. So there was a pretty good sharp sell-off, but it was, met with light volume right back up on Thursday and Friday. Again, there was lots of speculation as to what caused it. There was no real news that was going on. Sometimes when you're up 15 to 20% in 6-7 week period, you're just going to get sell-offs like this. We had lots of FOMO. Lots of market participants were off sides, and you're going to get these big, sharp declines here. At some point, someone's going to want to lock in gains, especially going into the end of the year. And that's really all that was. So right now, markets are hanging in there just fine here. If we zoom out, you're going to see we're not that far from the all-time high. On the spiders, this is dividend adjusted, just so you know. So the SPX is actually, the all-time high is 48.18. And you're going to see it's right about there. And the spiders, again, it's dividend. It's slightly skewed from the dividend here, but that all-time high is 479.98. And again, either way, we're a stone's throw away. I do think the market needs to do a little bit of backing and filling. And I do think that at the very least, that little sell that we got on Wednesday is kind of a warning shot of that. So, again, very extended here. Some of these gains need to get digested. And I think that, we'll likely see that happen as we get into the new year. And then, potentially the market can make a little run and challenge that all-time high. So that's kind of what I'm looking at here. I do think we'll get a January effect when you have a very big up year, a very positive year. A lot of the time you'll get a January effect in the following year as that new money comes to work. But right now, markets are stretched overbought, and they will likely do some backing and filling, I think, and possibly into the end of the year, maybe even the first week of January. But right now, no real problems out there for the markets, and, we're just kind of digesting these gains here as we get into that holiday period. The triple Qs here, again, they made new all-time highs, and again, same kind of deal. Little outside candle, pretty good uptick in volume on Wednesday, but then right back up into the end of the week. So again, nothing to say that the Qs can't go higher here. And this little pivot top here, 410.47 remains an interim or a short-term top until proven otherwise. Same thing with the spiders. That 475.90, which is this pivot high, remains resistance until proven otherwise. One thing I will say, and I haven't talked about volatility in a while, but I do think protection is very cheap here. Not on the short end of the VIX curve, but going out a few months here, if you go out to maybe March, I think that protection is very cheap. I do think volatility is bottom. You're going to notice this little line here. I've had that in for a while. Generally, before a correction, we all know a correction is coming, right? This market is, the Dow has gone parabolic, right? Up in a straight line. That's unsustainable. We know that's coming. The correction's coming. But typically, volatility will bottom before the market corrects. And I think that we have a bottom in vol right now. You saw that in June, July. We bottomed here. We rallied up a bit. And then we just kind of grinded higher. We had a little challenge outside of it, but we closed back above. And that was before the correction. So we actually bottomed in June on the VIX, whereas the markets, continued higher all the way, almost into August there. That is typical. I do think that remains the theme here, and I think smart money is going to continue to buy protection the higher we go, because at some point this move does become unsustainable. Traders will get off sides, and you'll have a pretty steep correction. I don't think that's going to happen right away. Like I said, I think if you go out on the VIX curve, or even out on SPX puts for protection, I think that's probably not a bad idea here to hedge, as protection is getting very, very cheap here, and volatility is starting to look unpinned. As soon as we had the VIX contract roll over on this previous Wednesday, it's not a coincidence. That was kind of the move in the SPX. So volatility becoming a little bit unpinned. And again, I do think there is an opportunity here if you're looking for some hedges a few months out. But in any case, let's move on to the Russell 2000 here. So again, new 52-week high for the Russell. We got up to the 202.50 level. I think this can go to 205 here in the short run. I mean, we hit this we banged on this area 4 times now, and we're basically above it. Still below this pivot here on a closing basis. You have another one at 205. The big level for the IWM though is this. And let me zoom out a little bit further. You can see the weekly. That was the big breakdown from 2021, 2022. We went up, we back checked it, and then we've been below it ever since. So that's going to be a major level for the IWM, right around 210, and we'll see if that can get up there. Maybe it can, in January. But I expect that if we do get up there, that's going to be stiff resistance, and it will probably require lots of backing and filling. Maybe even could start a bigger correction in the Russell 2000. The diamond here, we just mentioned the Dow a little bit. Again, that's at a new all-time high. Still, this little pivot high represents short-term resistance. Again, this needs to do backing and filling. It is way overbought. And I think when the correction comes, this can come down pretty sharply because you've gone up very sharply. I don't think that's going to happen right away. But just keep that in mind, that this type of move is not sustainable. Semiconductors here. So the SMH, again, continuing to pull back here. We made a little bit of a tail candle last Friday. And this week, just a little inside week. So nothing terrible. Again, a little outside move on Wednesday with everything else, and then right back up into the end of the week. I did calculate a move on the SOX up to 4,300. So that could get tagged. It doesn't have to, but that's just a calculation I did for a price target. Again, it doesn't have to get up there. It's not a short either. That's just an upside objective. But again, semiconductors remain strong, just like everything else. Cloud software continues to be a powerhouse here. Every week I say I think this needs to do some pulling back here, and it just continues to defy gravity. Beautiful coil there, and then a huge thrust. You're coming into these pivots here around 410 on the weekly. We'll see if that finally acts as resistance here. But cloud software has been very strong, even despite poor performance after earnings on Adobe and Oracle. The sector has held up really well. Transports had an interesting week here. So again, had a really ugly outside move on that little Wednesday decline. And then Thursday, Friday, right back up. We actually made a new local high. Not a new local closing high, but we made a new local high on Friday. And again, the transports here are fine. I could see probably 16,250, 16,3 in the near term. That's kind of your max move right now, and then ultimately, I think this can go up to 16.8 if it can get up there. So transports are acting okay, and I don't really see any problems with that chart right now. All right, so let's move over here to interest rates, and we'll start off with the 2-year as always. So the 2-year did back off this week. Testing that 4.25 area again, or hovering just above it rather. This is still a pretty good level here for the 2-year. I think maybe it could inch down to 4.15. That's really all I'm seeing though for downside in yields. And I do think that right now the market is a little ahead of itself here with the rate cut expectations. That said, even if we do get rate cuts, I think the long end does stay pretty stiff to the upside. You've seen the 5-year there. I could see 3.75. We're not that far away. In the 10-year, I've got this yellow line marked in right around 3.7, 30-year right around 3.8. I do think yields surprised to the upside a little bit in the first quarter. Again, I think the market's way ahead of itself here, and I think that's going to be a tailwind for commodities as well. I'm kind of positioning myself that way personally, and you're going to see here, if you take a look at specifically energy. We can take a look at crude here, and we'll look at crude later, obviously. But if we just compare that with the 10-year, you're going to see it's pretty close, right? For most of the year here, outside of this little outlier where we had the OPEC cut, it's been pretty close. We just chugged up in the summer, a little pullback there, a little push, and they kind of topped around the same time. And right down here as well, crude trying to put in a bottom. Seasonally, crude does bottom around this time of the year as well. And even if you look at nat gas, the big down move, and then we had the pop here, that big bounce that nat gas had in Feb, March, and then just kind of a chop fest. And as yields were inching up, nat gas was starting to inch up as well. You had kind of these little dual peaks there, 1, 2, and then right down with yields and nat gas trying to put in a bottom here, possible a seasonal low as well. So again, that could mean higher energy prices going into Q1. I do think it means higher commodity prices. But again, yields here are very interesting. And again, it's funny how a month ago, really a month or two ago rather, everybody was on the one side of the boat here, short yields, short bonds. And now everybody's, that's it. Bonds back to, yields back to 2% and, buy TLT. So I'm starting to see things get a little offsides to the other side of it. That's just what I see right now. But in any case, we'll just look here at the 10-year on here. I'd say around the 3.7, 3.65 area here on the TNX is going to be a pretty good support level. And it is starting to get pretty oversold, as it is anyway. Anyways, let's get over to housing here. So XHB continues to chug higher, or at least have an inside week here. Right now, you have an up move, bull pattern, up move, bull pattern, up move, another bull pattern. Just be aware that these patterns tend to fail when you're at an extreme high. As you get buyer exhaustion to come in. But right now the trend is up and I can't say anything. Otherwise, they are liking that lower yield. If yields do start to reverse, that's where I think home builders will start to come back to reality. Your first, mega stop here would be the previous all-time high around 86. And that's a fair bit away. I mean, that's 10 points away here on a $95 equity. It looks like a big move, but you also have to figure when this corrects, it's going to be proportionate to the move that we've had. It was only $70, 2 months ago, and now it's 95 at an all-time high. So either way, right now, no problems here with the home builders, but they are extended and overbought. Commercial real estate with REITs here, VNQ, again, pulling back here. This is doing what it needs to after the big thrust. Weekly time frame, again, we went into that 100 and 200 moving average, and this does need to back off here, and that is doing that right now. Same thing with the financials here. So the XLF pulling back off the highs. That can still get to 38 and a quarter. KRE pulling back in as well. So looking around $50 for a pullback on that. That can still get to 56. And the KBE we would be looking for 40. We'll just say 42.50 to 43, and then 44 was kind of the level that we broke back above. So we'll see if that holds as support, and then we'll say about 48.50 would be your next big level there for the KBE. Broker dealers again made that new all-time high. We talked about that price target. It smashed through that, and it's continuing to go up again. It's overbought, it's extended, but there's nothing to say it can't go higher here. But I would like to see some backing and filling in that first. If it does come down, 520 is going to be the key level. Okay, so back to crude here and commodities. So oil right now is a little interesting. So I'll put all these lines back on here. So I talked about getting back to 75. We did that, and we're not really getting rejected. It's pulling back, but if this just firms up here into the end of the year, I think this will go to $80. I don't know if that's a major low. I would prefer to see a little bit more volume at the lows. I'd prefer to see some type of a flush. But near term, I'll say that can go to 80 if they can get through 75. But I do think you need to flag up first. I would prefer to see one more divergent low, whether that's in a higher low or at least a spike of this low. I think that would be a pretty good buying opportunity for crude. But either way, in the short run, pattern-wise, it's not terrible. It's trying to get through that 75. If this just cooks in the oven a little longer, it can get up to that 80 handle, and maybe even 81. So that would be kind of that red bar breakdown right there. But that's really all I'm seeing for crude right now. But I do think it is getting interesting and starting to get a little attractive here, timing wise. XLE. So again, maybe a little fake breakdown, right? So we go to the weekly there. So we had the bear flag on the weekly. I talked about that. We tried to put an inside bar. We tried to break down and it didn't. So it could be a fake breakdown. I need to see a little bit more here. The daily pattern, is suggestive, maybe a move to 87 if we can consolidate a little bit further. I'm not so sure what this wants to do here. I've avoided the energy names right now. I just don't love the patterns that they're putting in. The XOP, again, same kind of deal. When you went to the trend line held. So, we got to give it that. And you had the bear flag, tried to break down, and now you're right back up. So it could be a fake breakdown. It's certainly possible. But I need to see a little bit more from these. Again, I would have preferred a flush in them to get involved. I was really hoping for oil services to get down. I mean, this is the level that I wanted right here. So right into that 280 area. It never quite got there. Daily chart, this actually looks okay if this can cook in the oven a little bit longer, possibly for a move to 330. Again, you're going to see the same thing, down move 1, 2, 3, attempted breakdown, and then right back up here. Trend is still up on the weekly, and what I really like on the OIH is the monthly. I love that pattern, and if that breaks out, I mean, that's probably going to 400 and then 450 and then 5. So I do like oil services here, but in the short run, I'm not so sure what that's going to look like. Uranium really quickly, CCJ, a little outside move on Tuesday and Wednesday, but by the end of the week, it finished fine. So trend is still up. No real technical damage here. You're still above 42.50, which was that previous pivot, and there's nothing to say this can't go higher. I think it's overbought. It's extended. It needs to pull back. I will say it's about to have a red month for the first time since March. So just be aware of that. That doesn't mean it's a sell. Just making note of that. Again, a lot of fund managers chasing this. Be aware of a correction that could be coming. It's overbought, but it's still holding up here. And if it gets another FOMO round, it could go to 50. The URNM, I like this a lot better. Pattern-wise on the weekly, no problems here. Moving averages catching up. I think this could actually pierce double top at this point. We've done enough consolidation here. So the URNM is actually acting very well, and I don't see any real problems there. All right, let's move over here to nat gas. We talked about that. So last week we came down. I talked about the quarterly OPEX, and then we had that nice rebound. This week, a little bit of follow through. So we had the little tail candle there on the weekly, nice little pop. And you have daily chart consolidation starting to form here. If this firms up, this will go to 280 and then maybe even 3 or a little bit higher. So nat gas acting much better here after that typical seasonal like November, December decline. We'll see. Sometimes this puts in a bottom in December. Sometimes it's January. Again, I think it's going to come down to yields here. And, if yields put in a low, I think maybe that would be a little bit of a tailwind here for nat gas kind of going into next year. But nice little recovery there for natty. And again, we'll look for 280 if this can consolidate that little move off of the lows there. All right, flipping over here to the dollar index. So the dollar backed off again this week, but it got to that trend line we were talking about. So we had a down move, little minor bear flag here, and then we went into the trend line and we did uptick off of that. So you can see right there going back to May 2021, big trend line there. I'm not so sure what this wants to do, to be honest. The dollar has been a really tough read lately. Ultimately, I do think it heads lower, but in the short run, that trend line may hold up, and if it does, this could get a bid back to 104, 104.35. If it heads down, you've got a little support at 150. And then, of course, the double bottom. Again, the trend line's not the be-all, end-all, so please don't think that has to be a thing. You see many traders, they lock into trend lines, and they think that, we broke a trend line. That means it has to crash now. There's other levels here. So don't think that it has to be the be-all, end-all. But it did get a bounce there, and we'll see what it does next week. Again, obviously, I think if yields can get a bid, that would probably be a positive for the dollar. But again, we'll see that, it could be a bear steepener situation where the short end comes down and the long end stays firm or even goes up a little bit. So that could complicate things. But dollar holding that level, and we'll just leave it there for now. Gold here, so that acted well this week again. Tried to get a little bit of a pop again. Here's my thesis. I just think there's a lot of supply in this candle. It's acting very well though, and it is holding up. I would prefer to see this consolidate more after that big reversal that we had a few weeks ago. And I think that, again, if I'm right about yields here, I think that's going to happen with gold. I'd like to see some of these kind of weak hands get off the train as well. But right now, gold is acting well. The trend is up here. You're just banging on this level. Take a look at the monthly. You're just banging on this level again. And we'll continue to watch that going into the next couple of weeks and months. And what I also like is you've got like the miners and the royalty companies. There's GOAU. This is firm. Like, it's not backing off here. You made a new local high. So this is a high from December 1st. It made a new local high, not a closing high, but it made a new higher high. You see the GDX, same thing. Didn't make a closing high, but it made a new local high, right? And that's important because gold is below this high. So the miners are starting to show a little bit of firmness here. And that's important. That's what you need to see if gold's going to break out. We need to see that continue. If we look at silver here, again, went right into this trend line, right off the highs and backed off there. So I still think it needs to do back-end filling. But if you look at SIL, right, big higher high here versus silver. Now, to be fair, this did happen in the overnight, this move. So some of this tail doesn't count for the regular trading hours because SIL doesn't trade during regular trading hours. But look at this thrust here definitely counted. So higher high on the first and the fourth, lower high on silver. You look at SIL high and then a higher high recently. SILJ high, higher high. That's bullish. So just be aware of that. The miner's starting to lead here. And that is a good sign here. Some of the guys, some of my members have been trading FNV. I do like this level here. So I think it could be a major bottom. You're going into the COVID low there. I'm just throwing a few of these out there for you guys. Went right into a 382 to the all-time low. Also from this pivot, 50% retrace into that COVID low. So pretty good levels here. I know some of my members traded Sabina. We'll talk about platinum in a minute. Beautiful falling wedge on the weekly and monthly. Nice breakout there. But I like, as you guys know, I talked about this last week, I love platinum down here. That had a minor little breakout. I think it's not quite ready. You might need to do a little bit more, but I love palladium. Write this down. I'm telling you, this is a bottom, possibly a major multi-year bottom in palladium here. And that continued to act well this week. I think if it consolidates this move, it's going to 14 and then 1500 and then possibly a lot higher. But look at that monthly downtrend, big outside move off the 200 moving average. Again, going to the all-time low. I'll show you one more time. 75% retrace. I mean, you can't really draw it up any better than that previous all-time high. I mean, that's a monster trade on the weekly. Failed bearish inside bar. I mean, so I love palladium here, and I definitely do own that via Sprott's ETF, actually, which is palladium and platinum. I like them both, but so couldn't decide. I had to pick them both. But in any case, those metals acting well. Gold and silver, watch for those miners to continue to lead. But big picture, I think yields potentially first quarter could be a little bit of a problem. That could be a major buying opportunity, though, so we'll be keeping an eye on that. All right, copper here. Again, we'll give that the upside bias to 4 if this consolidates sideways, and that's really all I see for it right now. I don't even love this wedge that much anymore. Let's just move this, we'll leave that trend line there, I guess. So we can we'll keep an eye on that. But I'm kind of neutral on it right now. But short term, I'll just say $4 for spot copper. I do think it has one more corrective move, though, which could also be a buying opportunity. But right now, I'm just leaving it alone. All right, so Bitcoin and crypto acted well again. And guys, I don't know if I talked about it in this video, but I'm telling you guys, Solana can go to 80 and then 100. Beautiful. tag 99.50 the other day. So some of these alts are acting well with a mixed results. We talked about those lower highs and lower lows on ETH. That corrected on Friday, so we just made a new higher high there. So some of the alts acting much better. Look at what Polkadot did. Big surge there earlier this week. Then Bitcoin here is still holding up. We did close above that red bar, so that's a positive. And again, I'm just going to give this the upside bias to 48. Nothing has changed there. Until it proves otherwise, that it's ready to correct, I'm giving it the upside bias to 48K. Again, to me, it's going to come down to the ETF news. Once that happens, I think you get a big pop, and then I think the correction comes. Kind of just a buy the rumor, sell the news type deal. I did hear that there was talk. It looks like that we may get news by January 10th, if I'm not mistaken. So I would expect this to just hold up until then. So I wouldn't expect any major moves unless, here's the caveat, unless it does not get approved and someone gets inside info, which a lot of the time they do. So if you see a big outside move, sell job on Bitcoin, and then a few days later we get unapproved, you know where that came from. But again, it looks like it's going to get approved. So that I'm kind of thinking we'll get a spike and then we'll get a correction after that. But Bitcoin's still holding up, and some of the alts acting well as well. All right, so lastly, let's wrap up here. So again, just to reiterate, I think right now, next week should be quiet. We'll look for some more backing and filling here, and then again, we'll look for some type of a January effect move in the markets. But again, I think the story here going into Q1 could be yields, and we'll definitely keep an eye on that. I think commodities are going to present a really good opportunity as well going into 2024. Anyways, guys, I'm going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you guys all next week.